Boom. Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about why it's looking to me like the stock market is going to be seeing more short to medium term downside. And when I say stock market, I am of course talking about the three major equity indices, those being the S&P 500, the NASDAQ, and the Dow Jones. You guys, unfortunately, things are just not looking good at the moment from both a technical and fundamental perspective. We kicked off the first day of this compressed 4-day trading week with an absolute bloodbath. So in this video, I do want to talk to you guys about my downside price targets on, once again, that short to medium term time horizon. How low do I think some of these equity indices can go? And also just talk to you guys about some of my general bearish thoughts around the macro and the markets right now. All right, so let's get into it again, you guys. In front of us is TradingView. We will be taking a look at the SPY and the triple Qs today, so the S&P 500 and the NASDAQ. We are not going to be looking at the Dow Jones on the charts. I feel the SPY and the triple Qs are a little more relevant to this channel, just considering we are involved in more tech and growth sectors. So we'll be taking a look at the SPY and the triple Qs today on the charts. I do also want to talk to you guys about the US dollar, or the good old VIXY. That is the US dollar weighted against a basket of other international fiat currencies. Pretty much just weighs the strength of the dollar, and the reason for that is of course because the US dollar is the base of all macro. If the dollar is gaining strength, which it kind of looks like it is, then that means everything that trades against the dollar will be losing that strength, which is pretty much everything. Okay, so we will be taking a look at the dollar. Got the VIX right here just to show you guys that there are ways to make money even when the stock markets are going down. There's always a bull market somewhere, even if that bull market is direct hedges to a bull market. So I'll talk to you guys a little bit about that just as we go through the video. All right, those are the three charts we'll be looking at today to sum up some of the fundamentals, some of my general thoughts, just to summarize it here. I do want to read through the intro that I wrote in this morning's newsletter, and of course sent out to the portfolio newsletter group. So let's do that again, just summarize some of my thoughts from a fundamental perspective, and then we'll dive into the charts and maybe expand on these if necessary. It's Tuesday, and we're kicking off the first day of this 4-day trading week with a meteorite crashing into the equity markets. Goldman Sachs announced earnings this morning, disappointed enough to catalyze this crash amongst the indices. We mentioned this last week, but this is objectively bad news for the financial markets. If banks are slacking, then the entire economy is slacking. There are obviously caveats to that statement, but you get the point. Bond yields are spiking, and we knew rates would be raised this year. I thought a lot of this was already priced in. I thought investors were aware of these macroeconomic headwinds going into 2022, but I was evidently wrong. And again, you guys, it's the Fed threw some subtle curveballs, but the way the markets are reacting right now is far beyond what I thought. The way that the downside we're seeing is a little exaggerated compared to what I thought. I thought a lot of this was priced in. Again, I thought investors were aware of just the rates raising, but it seems like now that the Fed's actually announced it, that, I mean, everyone for some reason was caught by surprise. So that's just the game, you guys. Sometimes that's just how the game works, okay? I think the equity indices are going to see more downside. Obviously, again, talk about the downside very soon here. Both the S&P and NASDAQ have broken technical support. That will make sense in a little bit. On top of these negative fundamentals, again, obviously bond tapering, bond purchase type tapering, and raising rates. Those are the primary negative fundamentals, and a strong dollar, which again we'll cover with the VIXY. Although I want to be a bull, it's more fun. I think it's time to be somewhat of a bear. There are names within the markets like Activision Blizzard, who just got acquired by Microsoft. That was huge. Shout out to any of you holding ATVI. And Blink Charging, good old Blink, who announced a partnership with GM that will see green in the seas of red. And of course, if you guys go down your watch list, there's probably some meme stocks that are doing well. A couple, again, Activision Blizzard, very large company, just got acquired by Microsoft. Actually, in after hours, I needed this one. Saw that SoFi, a pretty significant position in the portfolio right now, actually just announced that they got a banking license, which is amazing. They popped like 16% in after hours. So again, you guys, there are always bull markets present in a bear market. This video, we're primarily just talking once again about the equity indices, or these baskets of stocks overall that I do think will see downside, because they've all been doing pretty damn well. Okay. So again, there will always be those lights, those little glimpses of light in the darkness, those little puddles, those little areas of clear water in a bloody ocean. Just going for weird analogies now. I hope and trust that there are names in the portfolio that will experience this. I obviously still believe in the fundamentals of these companies, but at this point, I have to reintroduce some direct index hedges back into the portfolio. So again, you guys, there are certain hedges, whether it be ETFs of the VIX or shorts, certain short ETFs of the SPY of the NASDAQ. There are ways to make money in bear markets when the equity indices are seeing bear markets. So just keep that in mind, you guys. But hey, if you have fundamental conviction long term, sometimes when you're seeing downside in your favorite names, like we have been for some of my favorite growth stocks personally over the past couple of months, just hold and don't look at your screen. Go outside, do stuff you love, and just remember that ultimately the markets do not dictate your happiness, and that number in your account balance, unless it will directly impact your life, which I hope to God it doesn't, will not directly impact your happiness, okay? So just play responsibly, you guys. I know that's easy to say right now, but, you know, for future references, sometimes you gotta get punched in the face. It makes you learn and develop as a trader, okay? Plug time. If you want one of these bad boys, one of these daily newsletters in your email inbox every trading day during market hours, along with a complete breakdown of my entire personal portfolio. You want to know how I'm trading, how I'm navigating my portfolio through what I believe will be some pretty choppy waters. That's going to be the first link in the description box down below. $15 a month. $40 for every 3 months, completely up to you. Do my best to make that worth your guys' hard-earned money. So it means a lot if you guys go check that out. Just a good way to support me as well if you're interested in that. So again, it means a lot if you guys check that out. First link down below. But if not, no worries at all. Let's dive into this guy. And of course, you guys, just give the video a like, subscribe to the channel. Let me know in the comments down below what you think about anything we're saying right now. If for some reason you're a bull, let me know why, because I need some optimism right now. And you guys know I'm an optimistic guy, but again, you just got to be objective, got to do your best to be rational, especially considering I'm blessed with this platform. Have to do my best for both you guys, and I mean, it's just responsible for my own portfolio to be as objective and rational as I possibly can, okay? So let's talk some technicals. I mentioned in here that both the SPY and NASDAQ did break their levels of support, but the SPY is actually just technically dancing right on this level of support on this ascending channel right here, okay? So as you can see, from this point, we'll call it March 5th of 2021, just under a year ago, I'm sorry, we have been in, the SPY that is, has been in this pretty solid ascending channel, okay? So solid ascending channel, spanning a little less than a year, and we are on the verge, just after today's price action, of breaking below that. Now, the NASDAQ has broken. We'll get to that right after this, but the NASDAQ has broken support, and I do believe the S&P 500 will be following suit in that break of supports, just given all the macroeconomic fundamentals that we kind of just covered, okay, and we've been covering for a long time. So when we zoom out here, it's a lot more. You can really grasp how much the S&P has grown, okay? So let's talk about some of these price levels after we go through this. So the S&P has gone from these March lows, again, liquidity crisis, boom, pandemic hit, from these March lows right here, 220, up to a high of 480. So it over 2x since those March lows in 2020. Now, when we get to my price targets, we're pretty much looking for previous levels that have acted as ceilings and floors on this ride up, okay? And the same principles apply to pretty much any, whether it's the NASDAQ, Bitcoin, the Dow Jones, whatever, Apple, Tesla, whatever. When you start seeing corrections, when you see support levels broken, which I do think they will, the next levels that come into play are going to be the previous highs and just areas in the past, primarily previous highs in this case when it's on its way down, that have acted once again as ceilings and floors. So my first level is going to be here, this yellow line around 444, just to kind of, which isn't that far down, but I think once this breaks, it will be a quick jump down here. Just to maybe, investors may be hoping that this will be a bear trap, which very well could be. But bear trap set a higher low on the overall uptrend, although it has broken the supports, could still set a higher low because it's above this low. Could come even down here like 435, 436. But ultimately, if I'm being honest, I do think at the very least, once this level of support is broken, we'll come down to test about $420. That is this previous high over here that we just said on April 5th, like April 16th of 2021. So again, you guys, in this current environment where rates are raising, where the dollar is gaining objective strength, the market's considering, again, the S&P, the NASDAQ have just been doing so well over the course of this past year. It makes sense that it's time to cool down a little bit. And that's kind of, I mean, again, I said this in the newsletter this morning as well. I do hope, and I do have a glimmer, a glimmer of hope, I guess, a glimmer of optimism that capital will flow from these larger equity markets, from large cap stocks like Apple, like Amazon, et cetera, that have been just holding strong and doing well. That some of that capital will flow into the stocks that have been just getting absolutely crushed over the course of these past couple of months, like SoFi and a lot of other names we talked about, okay? But again, that's just a hunch, that's just a hope, but I want to relay some hope to you guys in what is objectively a pretty pessimistic but objectively true scenario, okay? Anyway, this is going to be the first target. The next target is going to be this, and this is a lot more dark of a target, but I do think it's possible, and this is going to be to test the top side. And if I'm being completely honest, you guys, I do think this is entirely possible, just because this is a very, very strong megaphone pattern. Okay, so the reason it's called a megaphone right here, top line right here, bottom line right here, is because it looks like a megaphone, ascending channel, perpendicular, megaphone, ascending megaphone channels, I guess, look like a megaphone because they stretch out like that. Okay, so big old megaphone channel broke through this. The SPY has not yet retested this previous line of resistance on this massive megaphone channel that you could say has been in place since January 18th January of 2018. First touch point there, other touch point creating that line of resistance has not yet been retested as new support. So worst case scenario for the SPY, if things really do get dicey, if we do get into a deflationary environment where the dollar is rapidly gaining strength instead of losing strength like it has been in this inflationary environment, helicopter money, Fed printing, they're really taking back their steps. The Fed's hand is on their sword. If in the case that they really do get rowdy and raise rates, say 4, even 5 times, like it's super rowdy this year, I don't think that's super likely, but even 4 times, and again, if investors are leveraged, we all know there's a lot of margin, a lot of leverage at play right now. There isn't the most responsible investments being made in this market with so much retail being involved. I do think it's possible that the SPY does still see a 15% correction to previous levels and retest once again this previous line of resistance on that long-term megaphone channel as new support. That would take us down about 15% from current levels, but it would also be just where we were. It would be pretty, no, actually, no, it'd be way above that. So if we hit this February of this year, or say like, let's just say March, because it might take some time for this to happen, but hey, it could happen quick, who knows. So March 1st, this would take us to $3.90, and hey, that would be exactly where we were just about a year ago. So if I'm being completely honest, that would not surprise me at all, but again, just stay optimistic, you guys. And remember, there are ways like ETFs of the VIX, like ETFs that track shorts on the SPY on the NASDAQ to make money or at least protect your portfolio in this turbulent environment. Okay, so just keep that in mind. And again, if you want to know exactly how I'm doing it, first link down below. Okay, so let's talk the triple Qs, the NASDAQ, very tech-centric ETF, of course. I'm sure all of you guys are familiar with the NASDAQ. If not, go Google it, go look it up. Anyway, the NASDAQ, as I said, has officially broken, has closed the daily below its line of support, which is making me extremely confident that the NASDAQ, unfortunately, will likely be seeing more downside in the very short term. This week is probably going to be pretty damn bloody for the NASDAQ, at least in my opinion. That's why I prepared today. Okay, so again, once you see this level of support broken, you just go to previous highs and lows. Okay, so if we come down here, this actually aligns nicely. This is just line of resistance on the NASDAQ, broke above, it's on a nice rally. Keep in mind, you guys, we're on the daily candle, so this is a lot of time kind of compressed into one chart. But the NASDAQ, you can see here, touch point here, creating a very solid line of resistance, broke above that. When it came back down, when the NASDAQ corrected in September of 2021, came back down, retested that previous resistance as new support, then bounced up, really started ripping to the top side of this ascending channel. Now, the line of support on this very long-term, very solid, like textbook ascending channel that's been in place since September of 2020 has officially been broken, and that is confirmed with the daily closure below that line of support. I think this is the first level to come into play right here. This is only a few percent to the downside. I wouldn't be surprised considering we saw a 2.5% correction today for that to happen by the end of this week. But if I'm being completely honest, you guys, I do think this will come into play at the very, I would not be surprised at all to see this come into play. This is going to be my absolute downside price target for the NASDAQ. September of 2020 was this high. And again, the NASDAQ in March of 2020 got absolutely crushed. This was the high of the NASDAQ before it got absolutely crushed. So this is the high over here, got crushed, came up, ripped up way beyond even this previous high before any news of the pandemic hit. Came up here, like significantly popped off, And I do think this high from September of 2020 will be a high that that is brought into the cards. Okay, but again, this is a bearish scenario. If I was to put the probability of it coming down 18%, I'd at this point put it maybe at this point, because tech is not going anywhere, you guys. Tech is tech, and we are becoming like the tech revolution is so real, and it's still very real, and it can be easy to forget the fundamental power of tech and new growth sectors when things are just going down, when you're losing money. It can be easy to make the bearish arguments, but that's why it's important to still remind yourself of the bull arguments and the reality, honestly, from a fundamental perspective of why tech's strong. But does that mean that we can have gotten super overblown in certain growth markets, and the tech sector of the equity markets may not have been overblown? I personally think they were. I do think the NASDAQ is due for a correction. I think it deserves a correction. So you could say that I do think this will come into play. I do think this is the next level right here. Just testing this previous high on February, just about a year ago, if we see it in the next couple of weeks, which would be about 9% down from current levels where we're at now at 370. But it wouldn't surprise me at the same time. I'm not even going to give a probability on that, but it wouldn't surprise me completely if we did see this previous high from September of 2020 tested, which would result in about 18% of continued downside from where we're at now once again. Okay, so that's the NASDAQ. And as always, you guys, I recommend you go into your charts or go into your trading view for yourself. Draw these trend lines on your charts. Anyone can draw these stick figure trend lines, but just keep an eye on these. And again, even if you may not be super active in the markets right now, if you're not directly trading these equity indices, it's just good practice, and it will come in handy over the course of your career as a trader, okay? Or even just hobby as a trader. It's okay to just be a passive trader. That's for the far majority of people. Okay, so let's close it out with the dollar. The dollar is looking strong right now. The dollar is setting a textbook higher high on its current just series of higher highs and higher lows. Boom, high, low, higher high, higher low, higher high, basing out this higher low right now, while also kind of using this line once resistance, again, new support on this ascending channel. Short term, the dollar is looking very strong. I do think the dollar will come up to, at the very least, test the top side of this solid ascending channel that it's been in since June of 2021 right here. Come up, test the top side. And if I'm being completely honest with you guys, I think it's likely that we do test the line of resistance on this overall, this longer term kind of ascending channel, kind of ascending triangle pattern. You could go like that. And it's kind of an ascending triangle. Even if you use this support right here, which is like absolute support on this longer term uptrend, the dollar has easily reclaimed this this overall ascending channel. So even if you get rid of this right here, this is a simple kind of ascending channel, ascending triangle formation that we're in. And I do think the dollar will make its way up over the course of the next few weeks. Let's do like a month from today, February 18th at the time of recording. That'll take us up to 98 on the VIXY. Okay, so again, the dollar, ultimately, you guys, is the base of macro. If the dollar is strong, and the dollar is just gaining strength in the wake of all of this macroeconomic, in that now that the central bank is forcing their hand, again, they've drawn their sword, they are going to action, which I thought everyone would freaking know, but I guess not. That is that is evidently not the case. But again, you guys, that's just the game. You got to adapt to the situations at hand. At least do your best to do so. And again, that's why I've personally started hedging the portfolio. Still, of course, I'm holding a lot of the stocks we know and love, we talk about here on the channel. But again, just to keep it safe, that is my responsibility as a trader. And again, especially considering I have to address you guys as well. Okay, so let me know in the comments down below if you are hedging. What's the largest position in your portfolio right now? How are you feeling about the general markets? And again, like I said in, what was it, whenever I made that video talking about how to emotionally handle downside market crashes and just trader psychology, if you need a digital hug, let everyone know down below. Wave Sam will give one to you. Okay, so we'll call it there, you guys. Catch you guys next time. And until then, always remember, take action, make waves. Peace.